Okay, hello, I am Jasmine Shapiro. I'm a realtor with Berkshire Hathaway Home Services Chicago.
And I'm Jordan Kagan, and I'm part of the senior resource team that we created to try to help bring awareness to so many different topics that comes to growing older, getting older, and not just for seniors and the baby boomers, but also things that affect their kids and their grandkids, because this is often a multi-generation thing involved as we get older.
Yeah, and we're very fortunate to have our guest today, Carey Rothbardt, who's a benefit advisor.
Yep.
And Carey, I was talking to you the other day and I was telling you a story about my mom who has a long-term care policy. And it was evident to my brother and I that she needed to have a little more care. And she was in denial and didn't want to start using this policy because she said, I have 3 years, and what if I use it up, and then what am I going to do? And you said there are so many different policies and so many different situations to help. And I think it's really important for our listeners to understand what's available.
Sure.
When do you start? Because you can't wait till you're 80 years old to try to figure this out, and it's really costly when you do need the care.
I agree.
So we're so thrilled that you're going to be here to kind of help our listeners to understand all of this.
Not a problem.
I know it's a passion of yours. You know, I know you're on the board of CJE for Senior Life, you know, where you're not trying to do this just as a career, but volunteering your time to give back to the community, create a safe place for people to grow older, and some of the different activities, living or daytime activities or things like that.
Sure. Yeah,
and
definitely.
you're not just a number cruncher. You play some pickleball and you like dancing. And
I love dancing. Yeah, I mean, that's like, get me on the dance floor. I'll have fun all the time with that. It's my passion.
So how does somebody get started? Like, what age would you say would be ideal to start thinking about your future, and what do you need to do?
Sure. I mean, it used to be that people would buy long-term care when they were older.
Right.
But that's not the case anymore. People are buying long-term care when they're younger. And the reason is they're seeing their parents, they're seeing friends go through this situation where they become a custodial care, like someone to actually take care of somebody.
Right.
And no one realizes how bad that is when you become that custodial person. And I mean, I don't want to get but if you have to bathe someone or help them with diapers, I mean,
I don't want my kids doing that for me.
It's very degrading. And,
Right.
and yes, you do it because you love that person.
Right.
But that's where long-term care is important, because you want to have something that's going to protect you. I always say that every financial plan, if you meet with a financial planner, advisor, whatever, should always have some type of long-term care in there. And like I said, people are buying it younger now, right? There are different types of long-term care policies out there. But I will say that, I'm going to give you a perfect example. The other day I had someone come to my office. He's 81 years old, okay? And I deal with anywhere from 50 and up. It doesn't matter. This guy's 81, and he's really interested in long-term care insurance. Comes to me, and unfortunately, 79 is that max that he could get long-term care. So he's out. He can't do it, right? So then I have something else that I thought it's called, we'll call it gap coverage. I'll get into that in a second. Another type of thing that's 360 days instead of 3 years to have something, right?
Right.
And it's just yes and no questions, and I'm thinking to myself, will he qualify for this? So we go through all the questions. Of course he doesn't qualify. And I'm thinking to myself, oh my God. And he says, only if I bought it when I was younger.
Right.
Right?
Right.
And that's the problem. The premium goes up every year for long-term care. So you want to make sure that you do get long-term care. And I'm going to give you another example. My wife, unbelievable. She went through a terrible time where she had what they call chronic pain syndrome. She had pain in her foot that was going up her leg for almost a year and a half. It was crazy. We had to figure out, do we go to Mayo? What do we do, right? So we ended up going to Shirley Ryan. They were able to help her.
Right.
8 weeks of physical therapy, biofeedback, anything you could think of to help her. I tried to get her long-term care insurance this was over 3 years ago. I couldn't get it because she had this problem.
And
sometimes you can't even get it.
And she was probably 50 then.
She was 50. She's young. I was able to get her a long-term care policy just recently, about a month ago, because it's been long enough time. I had to go to all these different companies to try to get it. What I'm trying to say is something can happen and you can't even get it.
Right.
That's why you get it now, if you
So,
can.
but it's really costly, isn't it? Like, if people are trying to save for their kids' college,
Right.
for retirement, for long-term care, I mean, how do people do it all?
It can be costly, and that is a true point, but you can also design it in a way that's affordable, because there's different types of long-term care policies out there. So, and I don't know if you want me to get into that, but there's life insurance with long-term care, there's traditional long-term care, there's just different kinds of things out there.
Okay, so there
And
are affordable ways.
There are definitely affordable ways.
So you're saying at least have a conversation.
Have a conversation.
Start the conversation with an expert like you.
Right.
Someone that you can know, like, and trust, and at least find out what is available and start the conversation.
Exactly.
Instead of pretending like you're not going to get older and no one in your family is ever going to need long-term care, because that's probably not reality. Reality
We're
is
living longer now too. We're living longer. I didn't mean to interrupt you. We're
Yes.
living longer, so you may need it. Chances are you are. You're going to
Right.
need something.
You're gonna need something.
So you got to protect yourself,
Right,
for sure.
absolutely.
So I definitely agree that you should definitely have something.
So what would you say would be the ideal time to start? I mean, if everything was perfect, would you say like 30?
That's young. I mean, I'm going to say. I
Okay.
mean,
All right.
yeah, and not to say, but it depends what you've experienced in life. Like for me, I'm just going to throw it out there. I lost my mom at a very young age. My mom was 58 years old. She had breast cancer.
Wow.
I think you knew this. She went into metastasized lung cancer. 11 and a half years. She passed away. I saw her go through this stuff. I'm a young guy. I'm not even 30 years old. Maybe,
Right.
right? I think people buy long-term care in their early 50s usually. But like I said, it just depends on the situation.
Right.
It's situational based.
Okay.
I really do feel that. But like you said, Jordan, sitting down with someone who, even if it's not me, talking to someone about this is very important, because that should always be on the table there.
And that's what we're hoping our listeners will
Yeah,
get from this.
definitely.
Like, don't wait.
Don't wait. Don't
Yeah.
wait. And
Yeah.
then, just
Yeah.
to get into something else too, if you have a long-term care policy, thank God, thank you, but make sure you review it. Make sure you know what you have. A lot of people don't know what they have, right?
Right. Like
What
my
I-
mom thought it was 3 years.
Thank you, thank you.
Right.
And here's the thing too that you might not know about. There's something called a waiting period or elimination period on long-term care. Usually there are 90, 100 days, just depends what it is.
And what does that mean?
What that means is if you end up in a long-term care facility, you can't do 2 of the activities of daily
And
living.
you have this policy,
And you have
right?
let's say you got this policy, right?
Okay.
That first 90 days is usually out of your pocket. So if it's a $9,000 home, that's $27,000 for those 90 days, right?
Do you get reimbursed?
Well, you can get you don't get reimbursed for that part.
For the
No,
90
no,
days,
the
no.
90 days is yours
just
out of your
Ugh.
pocket. So there's something called gap coverage, where you can actually gap that coverage, where there's no waiting period, and that could be your 90 days.
Wow.
So people don't know about that too.
So let's talk about going to a nursing home or
Yeah.
facility. No, before that even.
Sure.
You get sick, you need an ambulance ride to the hospital. How much is an average ambulance
Oh, my God.
ride?
Yeah,
And
people
what,
don't- yeah.
what effect does that have? Do you,
Doesn't insurance cover that?
Not
Medicare?
always. No, not always.
No?
So what happens is if you end up, 90% of claims happen 5 minutes from your home. Okay? If you end up being in an ambulance, a 10-minute ambulance ride, believe it or not, the national average is anywhere from $940 to $1,277
Wow.
just to be in an ambulance,
Wow.
because your insurance only covers a certain amount of that. So usually there's like an 80-20 plan, right? So 20% you're responsible for, but it doesn't cover everything. Now a lot of people say, well, if it's in my neighborhood, they're not going to charge me. That could happen, right? But what if it's not in your neighborhood?
Right.
What if you're traveling somewhere else? How about this one? What if you're out of the country? And perfect example, do you remember when COVID was really bad and we had a cruise ship and people, remember they had to take those people off the cruise ship?
Oh, yeah.
They had to be airlifted on a helicopter. That could have been 20, 30 grand out of their pocket. It's insane. So when you mentioned it, there is ambulance coverage. Definitely, for sure.
Interesting.
So is that a
Never-
separate policy?
That's a separate thing. Yeah, it's a total
Wow.
separate thing. It's something that we do offer through our company. And I think did we even say the name of my, what we're with?
AMBA.
AMBA, yeah, so I'm with AMBA.
And does AMBA have a niche?
Their niche is usually in active and retired teachers. So even principals. So we're an association, we are actually AMBA, right? So we work through the IRTA to help active and retired teachers to help them through that maze of insurance.
Wow.
So those people that were so kind to educate our kids and our students or us when we were younger,
We got to get back to them.
thank you. That's great.
Definitely get
I
back
had
to it.
never heard of that.
And
Yeah.
we'll put all of this in the show notes.
Oh,
so
I appreciate
our
that. Yeah,
listeners
yeah.
will
AMBA
be
is
able-
a great organization. They've had over a 23-year relationship with the IRTA. Just an amazing organization, and it's just great to have that bridge that with those teachers. Teachers, they've helped us out all our life.
Yes.
They need that help too.
Yeah.
And my wife's a teacher, by the way, too.
Oh,
So
okay.
she's been a teacher for almost 23 years, and she's retiring in about 4 more years. She's a perfect example, so I do
Yeah.
understand. The senior thing, the teaching, that's always been in my life.
My wife's not a teacher; she's just a librarian
That's
that
okay.
works in a high school.
Yeah.
So
Not
That's all right.
just, she is a librarian.
she is a well. His is a teacher,
Right.
but mine is an
It's okay.
educator.
Right.
Mine's an educator too. 2 great wives teaching.
That's it. And they're the best. That's all.
Yes.
All good. So,
Right. So how do you incorporate healthcare costs and long-term care considerations when you're doing a retirement plan?
okay. So, obviously, Medicare has covered almost, well, they actually have cut $719 billion in Medicare costs now. I mean, it's amazing how much, and every time it gets worse and worse. So you can't count on that. But when you figure all this stuff in, that's where you have to budget and make sure you know what's affordable, right?
Right.
You never want to put yourself in a jeopardized situation where it's not affordable.
Right.
But when healthcare costs are going up, everything's going up, but at the end of the day, when we get back to long-term care clock again, start younger is better.
Right.
Because obviously in the budget sense, that's going to be a better thing. But you gotta weigh it out. You really do.
Yeah, so it's probably each situation is a little different.
Exactly. Situational base, always
Okay.
different. That's why every person is not the same. And any
So-
financial planner who sits down with anybody, they all have a different situation.
So when you meet with a client and you're talking to them about different things, do you plant that seed and tell them, I want you to remember this when you can afford it, or do you kind of like work it in?
So it's interesting. We have with AMBA, which I'm doing now, is we have like these menu of benefits with different things that we offer. And what I usually do is let's talk about gaps in your coverages that you have now. What is most important to you today, right? Is it long-term care? And because I'm, like I said, people could be 55, 50. It could be any age, right? But I'm dealing with a lot of older people, like in their over 50. And I say to them, what is your objective? What are you looking? Why are you here today? Why are we talking? That type of thing.
Right.
And I think it just depends on the situation. A lot of people buy the long-term care. A lot of people buy that short-term care, which is called that gap coverage again, as I was telling you about. And if people travel, they like the medical insurance type of thing. So it just depends. We even sell life insurance too. I mean, we do it all. I mean, it's really about, and I'll say it's a maze through the insurance. How do we understand what we need? But when we sit down with someone, that's kind of how we figure that out.
Right.
So let's talk about the current medical situation in America.
Sure.
And I think it's got a lot more complicated.
Oh my God.
So let's just say that
Yeah.
we're talking about 1 out of 3 American adults are pre-diabetic.
Okay.
80 to 90% of them don't even know they're pre-diabetic.
It's true.
We sadly now have people as young as in their 50s having early onset dementia. So you're pre-diabetic, or maybe you're having some dementia kick in, the doctor mentions it, and I come to you for long-term care coverage. Am I going to get it?
Highly unlikely with dementia. That for sure not. I mean, I could tell you that this is interesting about long-term care too. Is they never used to have this, but if you have Alzheimer's in your family, let's just say you have 2 more people, they will deny you. They won't even give you long-term care. A lot of people,
Wow.
which is amazing. So I would say dementia would be a tough one. I mean, I'm not an underwriter, so I don't want to put. I'm not the
I
underwriter, so I can't answer that
Just
question.
say from
exactly.
your experience.
But from
yeah.
experience, it's going to be very difficult to get something like that. But there are other things that may work. You know what I mean? There's different kinds of programs out there. But I understand what you're saying, Jordan. It is, people are getting things younger these days. It is harder. But it's not easy to get long-term care insurance either. I mean, it depends on the situation, like I said.
So as you're saying, there's different things. If it's not long-term care, maybe it's a specialized life
Might be
insurance.
a different type of thing.
Yeah,
It could be an annuity with long-term care. It just depends on if you qualify, type of thing.
Yeah, you had mentioned something when we talked on the phone the other day about life insurance. You could
With
also have
long-term
long-term
care.
care.
So there's a policy, just throw it out there, that's life insurance with long-term care rider. So a lot of people today like the people, we'll say the baby boomers, whatever, they had long-term care policies, amazing long-term care policies went back, but a lot of companies are not writing long-term care anymore. So now what it is people don't want to pay all these premiums into a policy and then lose them. So there are people who have life insurance with long-term care riders, and what happens is it just takes from the death benefit and they use that for the long-term care. And if they don't use it, it's there. It just depends on, like I said, again,
Right.
the person, do they want to dump money in a policy? What do they want to do? Do they not have enough life insurance?
Right.
And that's why they have these they design these long-term care policies the way they did now, so people have choices.
I think that's wonderful, because I
Yeah,
don't
it
think
makes
it
it
was
easier.
that way
No,
a
it
while
wasn't.
ago, and
It
it was
wasn't.
so expensive.
Traditional long-term care was what it was.
Right, right.
Yeah,
And so a
100%.
lot of people just couldn't afford it.
100%, 100%, definitely.
And what about inflation? Like,
Okay.
how does that play into long-term care?
I mean, inflation is so high right now.
I
It's
know, but
insane.
like,
I mean,
You
everything
take out
is
a
more expensive.
policy and you think it's gonna go to pay your medical, whatever your needs are when you get to that stage.
Right.
Will it cover it when you get there? with
So that's a
inflation?
great question to ask, because there is, when you buy traditional long-term care, right, there's simple and then there's that compounded effect, right? And if you're younger, you should definitely do the inflation protection of 3 or 4% because you want it to keep going up because costs do go up, right?
Right.
But if you're a little bit older, maybe you do a much higher benefit and that will take care of that. So it just depends what age you are again, right? We've talked about, we keep going back to the age thing.
Right.
And I don't want it to sound like, oh, you're old or young or whatever. It's not that
No,
at
it's
all.
just when should I listen or-
listen and do this?
Right.
And I think if you're a younger person in your 50s, I think an inflation protection is a great idea. You keep going up because long-term care prices do go up. That's how you keep up with it. If you're let's say you're 60, 70, or under 80, maybe you don't need inflation. Just
Okay.
depends.
All right.
A lot of unknowns, right? It's not like I could give direct answers on what it is. It's situational based.
Right.
And I think, as you said, each case is unique. Our background, the unexpected accidents happen. Not everybody has kids. Some
Right.
people have 1 kid. Some people have 5 kids. Some people have kids, but their kids are all out of town. So I think to sit down and have a real heartfelt conversation sooner than later, because it's not one size fits all.
And it's funny because when I think of I'm a financial advisor myself, like I have my own financial advisor, and the reason I have my own financial advisor is because I don't want to make those decisions for myself, right?
Right.
It's not good. You always want to have that other party doing that, right? And I think it is always good to sit down with someone, even if you don't buy anything. Learn. It's an educational thing, right? There's a lot of stuff out there that people don't know about, and that's where you should seek a professional for that stuff.
Absolutely.
I mean, there's no doubt about it. So I definitely agree. But if there's anything I could do to help, I mean, that's what we do here, and I'm always happy to help people. I love helping people.
And I've known you 30 years, Carey.
I know.
And,
Isn't that amazing? Wow.
And you've always been kind and giving. And it's one reason I invited you to
Thank
be a
you.
guest on our podcast, to share your expertise, your wisdom, your kind heart
Thank you.
with the people listening.
I
Because
appreciate that.
it's not the funnest conversation,
But it
but
makes
it's something we need to have.
It's inevitable. It happens, and we have to be prepared. It's really as simple as that. So,
And we will put all of Carey's contact
Thank you.
information on our show notes if any of our listeners want to reach out and have
Appreciate
a more
that.
personal, in-depth conversation.
Thank you. I thank you for your time today, and we
Thank
do
you,
all
Carey.
kinds of different insurances, so if they need any help, we're happy to help. No problem.
Thank you.
Thank you so much.
Thank you.
And we look forward to seeing another guest next week, so stay tuned and we'll see you next week.
Thank you.
Awesome.
Thanks for joining.